Oh,
Live. What are you going to say, Tevis?
so Anthony Noto also tweeted about SoFi Plus earlier this week.
Oh, yeah, he did.
Oh, yeah.
All right.
Yeah,
We're
making
live.
it official.
Episode 2, SoFi Weekly. Thank you to everyone who showed up for the first episode. We got a lot of positive feedback on it. Seems like a lot of you want it. A lot of you like it. A lot of you enjoyed the vibe and all that stuff. So we're back again, episode 2. We're going to keep doing this as long as you guys keep enjoying it. And we're going to be covering the news for this financial technology company that probably is going to be very big one day. And if it doesn't, then we spent a ton of weeks analyzing if it could be big. So we're back, episode 2. Before we start off, first of all, Riley, Tannor, Tevis, how are you guys?
Oh, Riley,
Doing amazing.
left.
Riley, not so good. He'll be back.
He'll be back. Tevis, how are you?
I'm doing well, man. Yeah, how are you?
I'm good. Tannor, when do you turn 25? When's your birthday?
On the 17th of October.
Oh, yeah, happy birthday, man.
Yeah, thank you. Thank you.
We absolutely missed. You didn't even tweet about it, bro. That's crazy.
I don't
Hey,
know.
Riley.
I didn't know what happened.
Riley, did you know Tannor turned 25 on the 17th?
No one did. I don't care
No
about that
one
kind of stuff.
Damn, that's crazy. Okay, well, I'll be.
Wait, wasn't it your birthday as well, Limit, this week?
No, it's the 27th.
Oh.
And you're turning 25?
Yeah, I'm turning 25.
Weird. I'm also turning 25. Well, actually, I turned 25 in May, so.
Yeah,
Okay.
fuck all
Tevis,
y'all.
what about you?
I'm 28.
You're 28? That's okay.
Yeah.
We'll do this soon. First of all, shout out to Emmanuel in the chat. My birthday was yesterday. Damn, Emmanuel. I had no idea. Happy belated to you, man. Emmanuel's a OG. He subscribed to me when I had like 11 subscribers, bro. I fucking love Emmanuel. So happy belated, Emmanuel. All right, let's get into the SoFi news. We have a big partnership this week with Bindable. Let me just share my screen real quick showing the tweet from Bindable, and then we're going to have Riley lead this one off. So Bindable on Twitter said, "We're excited to announce we're working with SoFi, the digital personal finance company, leveraging Bindable's platform. SoFi will offer their members direct access to relevant offers via SoFi-branded online choice marketplace for auto, home, condo, and renters insurance." So this is a insurance-based partnership. Riley, should we be excited about this deal, and what do you think is good about this?
Yeah, it's a really cool deal. Like first, it just looks like a normal deal, but underneath, what it is a technology company like hyper focused on dethroning like traditional players. And what they do is they make it to where you can white label insurance products and have them all branded yourself. So what's going to happen is 6 months from now, SoFi is going to have a day or something where they release a bunch of insurance products, and they're all going to be labeled SoFi Insurance, SoFi Home Insurance, all this stuff, and it's all going to be SoFi's, and it's not going to. You're not going to find Bindable anywhere on it. You're going to call SoFi. Agents will be able to talk to you about your insurance, and it will, from the surface level, look like it's all SoFi's. And then SoFi over time is going to try to replace that with their own infrastructure, so they're vertically integrated. But it's just cool because they're offering way more to their users, and they're continuing that thing of just making like their product as valuable as possible to their members.
So it's literally just a white label at this point? Because like SoFi partners with, Gabby, with Lemonade, with Chubb, all of these companies. So what does Bindable now offer? Because from my understanding of it, they almost sound like a middleman that connects many insurance companies to just aggregate and get the best end user experience. So is that the value prop? They're just a white label for SoFi right now?
I'm not sure. I do know that it's like an all-in-one solution. It takes care of a lot of the problems SoFi is going to have when like building it themselves. And right now, SoFi is trying to scale and get as many direct deposit users as possible. So if they can offer like this product, even though they're going to be losing money on it in the short term, and they grow their user base so where in the future they're so much more profitable that they have the capital to fire out and actually like do this themselves, I think that's their idea. I don't know specifically what Bindable is as a fairly new partnership that was announced, and surely they announced it right before the quarterly earnings, just like they usually do weeks before they release all these partnerships that they're doing. But I'm not sure. I can't wait to dive in deeper and talk about it in the next pod whenever we have a lot more information. But it does look like it's a white label, and it can do a lot of stuff in one.
Yeah, I think that the two things that sort of stuck out to me were, number one, that they have both an enterprise SaaS offering and then what they're calling insurance as a service. And it almost seems to me that you're going towards this path of further aggregation and just white labeling solutions and making everything out of the box. Like you have banking as a service now, which is what SoFi is trying to get into. And then you have insurance as a service. And then you have like the SaaS side, which is the more like it's becoming more traditional at this point.
Yeah, it's like I don't think anybody else is doing this. Like pretty soon here, and by the way, SoFi Plus, I've heard that should be completely fully rolled out by the end of this month, and
So
everybody
SoFi Plus is like Robinhood Gold, basically, right?
no,
Yeah,
I mean
you don't pay for it.
You don't pay for it?
yeah,
No,
it depends. It depends.
Yeah, it's based on how much you deposit.
In the short term, yes. It's only for direct deposit users, but I could be wrong, but I swear somebody said or Noto said that they are going to try to open it up to other people that don't have direct deposit, because that's a lot of people on SoFi right now.
But it's not currently that way, right?
No, it's not currently that way. Right now, it's only direct deposit members, and you get double points, which they already have a high point ratio, like just right off the bat when you join. I've earned like $111 just from points without a credit card.
Right.
Feeding that
So
point system.
it's
So it's
just
just
the double
insane.
points and the 0.25% off the personal loans. That's really what's new. And then obviously the direct deposit features that they've already had, like the 2.5% and things like this.
Interesting. Yeah, I thought it would charge $5 a month. I guess that's good that it doesn't.
Nothing right now. As long as you deposit at least $1,000 a month, I think is what it is on direct deposit.
Yeah, but the interesting thing about that is that the potential for it later on down the line after they introduce it for that cross-selling opportunity is just really big, right? Because you can imagine a world where they're starting to give you benefits on the FinServe side in addition to the lending side through SoFi Plus, right? And so they can make it a little bit more aggressive in terms of the deposit limits that you need to have, but ultimately the abilities that it unlocks for the flywheel is really what gets me excited about it. But that's long term. That's far out, right? So right now it's just points. It's just a better APY, and the requirements aren't even that strict.
Yeah, and I think it's mainly, you know what, if you're going to go head to head with another lending competitor and say, okay, well they have similar rates, but I am a direct deposit user with SoFi, well, might as well get the 0.25% off, or even that might get you into doing direct deposit because you can get that offering on a personal loan with all the, reward points and everything that you would also get. So it's very exciting.
Another cool vertical is that I heard somebody in the SoFi stock Reddit was talking about bindable. There's a lot more below the surface with bindable. They do offer all these like tech solutions for like insurance, but they also do some cool stuff that might have some parallels with SoFi Relay, where you can take in third-party like loans or insurance and actually just see it on a graph like in your Relay app, and really be able to see like, oh, this is how many payments I have, and then see like a graph. Well, what happens if this happens, and it'll see your deductible go up, and all these little cool solutions. That would be really cool if Relay was able to like measure your insurance rates and stuff.
Yeah, and I haven't looked into bindable too much, so I don't know what they're. I think I messaged this to you, Riley, but like I feel like every company that we've dealt with a little too closely, we've put an offer in to buy the whole company. I mean, that's how. Yeah, that's how we bought Technisys. We wanted a new banking core. That's how we bought Galileo. That because we wanted an issuer processor. So once they start dealing too closely with bindable, I'm like, well, how expensive is this company? I don't want to go buying again. So.
Well, it almost seems also that bindable, as just from their offering alone, seems to be like an on-ramp onto SoFi becoming a primary themselves, right? Because they're essentially like an aggregator for multiple insurance products. SoFi is already dabbling with multiple insurance products. We know that they have ambitions to become a primary provider, i.e., not get a referral fee, but actually do everything in-house so that they're the ones offering the insurance product. That's what a primary means, because right now all they're getting is a kickback to refer you to Lemonade or to someone else. And so it seems as though bindable is like that dry run or that intermediary step to set them up for becoming a primary later on down the line.
Yeah. So speaking of Technisys and Galileo, we didn't get a chance to talk about it on our inaugural episode, so I want to take a section of this pod to kind of talk about what our thoughts are. One of the bull cases, obviously, of SoFi, outside of it replacing legacy banks, is it being the back-end infrastructure for the next 1,000, 10,000 fintechs that are start, just like Amazon is the back-end infrastructure for like hundreds of thousands of companies and governments today when it comes to cloud computed storage. So let's do this for those who are new to the podcast and for those who already kind of know about it. Can someone give a top line level breakdown, like if you're explaining to a third grader why Galileo, why we bought Galileo for 1.2 billion and what it actually is going to be able to do for SoFi?
Galileo or Technisys?
I guess they do two different things.
Yeah, so both. Why do we both make those acquisitions?
Okay, I can take this. So Galileo is practically a payment processor. They play a role in the whole payment network, and they sort of allow companies that need more data or payment cards like debit cards or credit cards, well, secured credit cards, to be able to offer those to their clients. So this is called payment cards as a service APIs. They also give embedded finance opportunities to different companies for their online opportunities. And it's sort of a completely different company than SoFi, right? They're not offering banking solutions or anything like this for SoFi. They're offering it to other institutions. So this is why the term AWS of fintech has been passed around by the likes of Anthony Noto or Chamath, is that the similar way that Amazon did it where they had a customer-facing company and then an enterprise-facing company with Amazon Shopping versus Amazon Web Services. This is the same thing as what SoFi is doing with Galileo and Technisys and SoFi.com or their app. Technisys, on the other hand, is a banking platform where they actually help design websites and the actual core processes for banks. Like every bank needs their core processes and then their ledgers. Core process is practically the outline of the actual banking, how it's set up for the bank. And then the ledgers, like, make sure that the zeros and ones align so then no numbers get out of place.
So maybe I can also just tack on the second part of that question. What is the long-term sort of bull case? Because I actually, this is fresh on my mind because I talked about it earlier this week, where this entire paradigm of the payment card as a service API, it's making it plug and play for many companies to have fintech offerings that are powered by Galileo. Okay, so for example, Riley on Twitter just reminded everyone of a Samsung partnership. Samsung is not a financial services company. They're not a bank. They're not. And so they basically use Galileo or to be powered by SoFi for them to offer their own credit card. And their own credit card then has benefits for Samsung products into that ecosystem. And so the long-term bull case, and a lot of execution risk in this and very long-term out. But the reason why this AWS of finance paradigm exists and why it's really the entire paradigm shift for SoFi is because it can change the entire landscape, where today you're competing on a front, sort of like a front end, bank versus bank, or one provider versus another provider. For example, if I want to get a credit card, I could go to the SoFi credit card, or I could get the Samsung credit card. However, the benefit of providing this all out of the box, this payment card as a service API, is Galileo will get a cut essentially for, sorry, I'm getting echo from somebody.
It could be me. Is it me?
Yeah, just put yourself on mute.
Galileo will get a cut from every sort of transaction for that client, right? Because it's a B2B offering. And so you can imagine a world, I mean, the analogy that I used in my video was it's almost like Tesla's full self-driving. And obviously a very imperfect analogy, but just for the sake of explaining that licensing model, Tesla can compete against Ford in terms of like a one-to-one vehicle to vehicle. If I'm, as a consumer, I'm going to choose whichever one I buy. But that technology is inherently native to Tesla because they've gathered all of that data, similar to Galileo because they have all of those APIs already built. They have that network already built to become a service provider for these financial services. And so all of these businesses now that want to create their own sort of credit cards or their own fintech offerings are inevitably going to be paying Galileo to do that because they can do it out of the box. In other words, Samsung doesn't need to build out their own payments network. They can just license the Galileo API or the Galileo's technology and then have a credit card that is powered by SoFi, and then they can also break into that offering. But this is a very powerful paradigm for SoFi later on down the line, powered by Galileo, powered by Technisys, powered by all of these back-end B2B offerings, because it's similar to that model of Amazon, right? Like you're connecting all of these different businesses with a unified backend perspective, right? That entire like, okay, let's take bookstores and let's put them online. That's almost how Galileo is going to be seen for the banking industry. It's, I think Anthony Noto, maybe Riley, you know this better than I, but he was explaining this in a fireside chat through an analogy where he was saying, you're just driving by and just bank branch, and none of them are really connected. They're all sort of on their own infrastructure. They're all siloed. They all have to do it natively. Some of them are running super legacy stacks. And so building a cloud service or an entire unified backend for that, and then licensing out that technology to other providers to, number one, enable them to have fintech offerings, while at the same time collecting payments for all of those, that is a pretty radical idea, and something that is the reason why that is seen as a paradigm shift in the long term, of course.
And the cool thing about all this is that banks are decentivized from doing this. If you look at the just culture in banks now, usually when you're on some sort of exec, like you're kind of like sworn in for like 5 years, and if you're going to be, if your time frame is just 5 years, you're not going to want to be putting a lot of like risky moves and shaking the system up while people above you are watching you very closely. One interesting thing is like when it comes to Galileo, one thing, like the reason why Samsung chose Galileo is because they didn't want to do it themselves at all. The fraud that you have to deal with, you have to build stuff from scratch, and if you mess up, your profit margins are going to be sinking. Like 2 to 3% on Samsung's level is a ton of money, and you're going to have to build this up and patch all these things. Like straight out of the box, Galileo provides this fraud detection system, and they've been doing it since 2001.
Someone in the comments said, "Is there any competitor to Galileo?" Can someone answer that?
Yeah, lots of competitors in any space. We hold no monopoly there. In fact, there are some massive competitors to Galileo. However, at least we think that we have a better product. And I can speak on that in a second. One of our biggest competitors, probably Stripe, probably about $100 billion market cap. They're a massive company. They definitely compete directly with us. But I think that we actually offer a better service. So, for example, with Galileo, that's just one thing, right? That's the service APIs for all the payment cards and everything along this lines, all the data, all the fraud protection, like Riley said. But now with Technisys, now we can go, okay, not only can we set up your payment cards, but we can set up your entire bank for you. Okay. Set up everything, offer you the payment transactions. You don't have to go to multiple different connections to have every process with a different, sort of partnership. You can be with us. We'll even offer you discounts for using multiple sets of our processes. And not only that, because SoFi is a nationally chartered bank, we can also store the money at SoFi. So if you guys don't have, a nationally chartered bank and you have cash management accounts, we can be that FDIC insured chartered license to actually hold that money for you. And that's sort of the next big play and the selling point of AWS, of fintech.
The one thing I'll piggyback onto that is with every subsequent acquisition that SoFi makes, they're further building their moat around Galileo's business. Like Galileo is a unique offering in terms of, okay, let's say it has 50 competitors. way less than that. But let's just say, for the sake of example, all of a sudden, Galileo plus Technisys, that narrows it down to 10. Galileo plus Technisys plus Pagaya narrows it down to, maybe 4. And so as SoFi continues to add more pieces to that puzzle, then they can further diversify their product offering and thereby build their moat even further on a technology platform perspective.
Yeah, it's incredibly exciting to kind of see Galileo actually be integrated, which leads us to Wisdom Tree as a partnership. Let's get into that one. And again, Riley, you can talk about this, but I'll share the screen. Wisdom Tree has announced Stride and Galileo as payments partners for Wisdom Tree Pride. So Wisdom Tree is a financial technology company. It's using Galileo as its backend. And it's going to provide users with access to retail payments capabilities, including demand deposit accounts, money movement capabilities, a bunch of other stuff, using Galileo as its strategic partner. Can you talk a little bit about why this is good for us, Riley?
Why it's good for us is we're making more money. I mean, it's as simple as that. And every company that this is going to be like an S curve, I think. Just these partnerships, the more money that we're going to be retaining under our belts, the more that we're going to start innovating. Wisdom Tree is just another part of that. Like, what is it? H&R Block is now a customer of Galileo's as well. And that was like a few quarters back. But I mean, nobody knows what H&R, like nobody knows H&R Block's savings app. Everybody's coming out with the savings app. Like Apple was coming out with the savings app as well with Goldman Sachs, which I think is kind of hilarious.
Can you bring that slide back really quick?
Yeah.
Because I did some reading. I read the whole thing and wanted to just make sure that we're all aware of what sort of happened with this partnership. So there's two different things that they spoke about. Okay. So what I find is really interesting because I don't just want to sell SoFi. Let's talk about the goods and the bads. One thing, there was two partnerships that were announced here, two main players. It was Galileo, which played a part, but then there's also Stride Bank. Okay. Stride Bank, I'd never heard of them before. They're supposedly huge. Why not SoFi? And this is super weird. So Stride Bank is obviously going to be that point of contact where they can actually help facilitate that as a program manager. Okay. So there's a lot of different parts that make up an enabler payment network. And Stride Bank is going to play the part of a BIN sponsor or a bank identification number sponsor, as well as the program manager. Those are two big parts that SoFi could play, but aren't playing in this matter. So I thought that was super weird that Wisdom Tree didn't choose Galileo and SoFi to be those different parts and instead chose Stride Bank and Galileo. I thought that was a little bit interesting, as well as talking about Wisdom Tree really quick. I looked it up because I've seen Wisdom Tree a bunch, especially if you're in the crypto space, which is what this is for. It's a crypto digital wallet. Wisdom Tree has assets under management of $71 billion. Okay. Is all that going to be going into their crypto wallets? No. If it does, that's where Galileo is going to make their money. They make it off of transaction-based revenue, and we take a fixed cost. So it doesn't matter whether you're spending on, $1 for a pack of gum or $10,000 for a new car or whatever. It's going to be a flat rate. Now, I don't actually remember what that number is, but it's important to know that Wisdom Tree is a big player, but they're heavily dependent on crypto. They play a lot in the crypto space. So right now they're about as low as they could be. So I don't know if anyone has any words on that. The next partnership, which hopefully we talk about, the T. Rowe Price one, is way more exciting in my opinion.
Okay, let's move on to that. But no, I think that's good objective analysis in terms of what's going on. I didn't even know Wisdom Tree was mainly in the crypto space.
The last thing I'll add on this article, and I'm sure we can just attach it maybe to the show notes after the fact, but it's a statement right here where it says that Wisdom Tree Prime Visa debit card will initially be available as a virtual card that can be used with Apple Pay, Google Pay, and Samsung Pay, with a physical debit card to be released shortly after. And it feels like Riley was saying, that everybody, it seems, is coming up with their own sort of unique app. Everybody, it seems, can do a virtual card in lieu of an actual physical card. Like, that is so easy in these days to do. You just hop onto an existing infrastructure. Like, what does it take? It just sounds to me like it is so easy, so much easier to onboard for these major companies going the route of a virtual card first, because there's so much less sort of hoops for them to jump through. And I think I've been seeing it. I mean, this is anecdotal, but I've been seeing it more and more where a lot of these non-fintech companies, just regular tech companies, are offering their own virtual cards. And it's just something that I think is going to become a paradigm that's more and more prevalent in the upcoming years, because it is so easily readable by these companies like Galileo, like the companies that actually provide the services to make it plug and play.
Yeah, and like you said, the people that are making those virtual cards possible is Galileo. So it's not that the tech companies are just walking in with these softwares. It's companies like Galileo that make that possible. So we're still needed in that service. Yeah.
Okay. Let's get into
one thing I find kind of interesting. Sorry.
No, you got it. Go ahead.
So like in 2019, Clay Willis, the former CEO of Galileo, like released this product called Galileo Instant, where like you as a fintech company can go to their website, go and click a few buttons, and then just like sign up for like digital like cards. Super easy. Something that would take like 6 weeks reduced to down to like 35 minutes. And that was one of the reasons why back in like early 2016, 2018, 2019, Galileo was kind of like a soft monopoly in the US, private company, of course. But it was really interesting like that. And they've scaled to as big as they can, but now they're like branching out a little bit more. But I find that interesting because just a few days ago, they took Galileo Instant off of their website, which makes me think their new CPO that they just announced a couple of months ago, their chief product officer, they're working on something completely different. That's something to really keep your eyes on when thinking about Galileo.
Yeah, I agree. I'm just looking at some comments here as well. I'm retired. SoFi should offer benefits of SoFi Plus to non-direct deposit accounts. They could also maintain a minimum balance like 10 to 20K. That would greatly increase membership. I'm sure it's in the playbook. That's really, really good. All right. Just if we could stick on the topic of Galileo, there's so much interesting stuff, especially for people from a MITS chat that maybe just started getting into SoFi. Like the growth in this account is quite unique, or the growth in this company is quite unique as well. Like whenever you look at the actual amount of accounts that came from SoFi, you have back in Q2 of 2020 to Q2 of 2022, the most recent earnings, we went from 36 million accounts up to 117 million. Okay. Just for anyone, that's 225% increase in the matter of 2 years. But the most interesting part is the revenue. Okay. The revenue from Q2 of 2020 was 16.4 million. But then in Q2 of 2022, it went up to 82.2 million, an increase of 401%. Okay. So not only are we able to grow at this blitz scale over the last 2 years, which is probably accelerated because of COVID, right? So I'll give credit where credit's due, but the actual average revenue per user is spiking. That's super, super exciting, especially for the Galileo clients. So yeah, very interesting there.
I want to comment on that, but real quick,
I just read that.
Riley guys, Riley, do you know this person by any chance?
No.
That's a sister, actually.
I thought she was like your girlfriend or something, and she's
like,
shout out to Lydia Stafford that says Riley's kind of cute. That's awesome. So why do you think it increased 400% over COVID? Do you think more fintech startups starting up and therefore they needed a payment processing API, or what do you think was the reason?
I think it could be because we increased our take rate, right? I don't actually know whether we increased the amount. So because it's a fixed cost per transaction, that you have to assume that there's been more transactions. Okay. So that could be that because it's been COVID, because of after this in the pandemic, that people are doing more online shopping. They're choosing to use their cards, whether it's with certain institutions rather than, traditional banks or through cash, and that they're actually choosing to use Galileo's cards instead. And most people don't even know that they're using Galileo cards. Like that's the interesting part, right? The cards that you get are regular debit cards. They're not branded with Galileo's name all over it. big names like Robinhood's card is through Galileo, Chime, Revolut, Coho here in Canada. These are big names. So if you have a debit card, they don't actually have credit cards yet. It's sort of a weird topic. They've got secured credit, meaning that you have to fund the cards before you actually use them. But yeah, it's quite interesting. Who knows what the take rate is and how it's increased so much.
And plus,
look, they're about to. They got a Visa verification. Sorry, go ahead.
Yeah, the only thing I was going to say is like, yeah, sure, 400% sounds like a lot, but at the same time, I think we're only really getting started with the Galileo product, right? The awareness is still fairly low. The acknowledgement and lots of people still don't really know how Galileo fits into the entire ecosystem or what it does. Lots of these large companies don't know Galileo's product offering as well as, they're starting to now. And I think that Visa Ready certification is really going to help them build that awareness, right? Because all of a sudden now you're in this club and you have a drop-down list from Visa's website of partners that are certified, and they've already been vetted by Visa, and they've already sort of passed that first hurdle, that first barrier. And so many more companies can now become aware of Sofi'S offering through Galileo. And so, yeah, sure, that 400%, it sounds like a lot. But again, if we're talking about something that has the potential to completely disrupt an entire industry, then this, to me at least, is really just the beginning. And we're actually seeing the most exciting parts have been very recently, right? Like that Visa Ready certification, that was something that, personally was super exciting, but so many people are like, okay, whatever, it's another partnership. It's not. It's the potential, again, of all of these moves is something that you always have to keep in mind.
So why do you like the Visa certificate so much?
Just because, so I think that the network effects that can come from it are, in terms of a new customer acquisition for Galileo, is really where that secret sauce is. Because
can you explain, Tevis, what network effects are before we continue?
Yeah, sure. It's just the relative growth is exponential with the more growth you have, essentially. So let's say, if I only know these other three guys and I want to spread awareness for my channel, I can only do that so far. But if those three guys also know another three guys, so on and so forth. This is why social media platforms like Facebook become so viral, is because everybody, like, I think what was a secret growth strategy? Everybody needs to share something with three friends, and then, three friends, and all of a sudden you're like 6 degrees removed from, Bill Gates or something, just because of like everybody in your network, everybody in their network, so on and so forth. Okay. Where that links to SoFi and Galileo is, look, Visa has a list of companies that they've vetted. Visa is like the largest rails, like in the world, basically. They have a list of pre-approved sort of partners. They've already vetted that. There's this anecdote where it's like, it goes something along the lines of, why are Harvard grads so likely to get a job, or so likely to be in a higher
Can you share my screen real quick while he's talking?
Earning bracket? Yeah, sure. And basically the analogy is not necessarily because of that university. It's because they got in, that a first layer of vetting has already been done, so that those companies later on down the line say, okay, well, if they got into Harvard or so on and so forth, then we're so much more likely to work with them because they've already passed one hurdle. And so it's a similar thing with the Visa Ready certification. Because they're associated now with Visa's name, they're on that list, essentially. So this is Visa's website. You can see Galileo there is a partner. Visa has all of these details onto Galileo. All of Visa's existing partners can work with Galileo through this. And don't forget that Visa is already making connections between their partners, right? So Visa is like that host at that party, and Galileo is just like the newest guest. Visa is going to like introduce them to all of these other companies. And because payment card as a service API, that offering is so niche, I think Galileo only competes with one other or maybe two other Visa partners in that same list. So if you filter by that payment card as a service API, all you're going to get is Galileo and like one other company. And Visa has what, 500 plus, what was it?
Yeah, so they say 500 plus, but this directory only shows 273 different companies. Did you watch my video, by the way? I covered this exact thing, that there was only two.
I also made one as well about it.
Oh, perfect. Yeah, so it was like CoreServe and Galileo that only offer the same payment cards as a service API. And just going down the list of what they can actually offer is really interesting. I think Galileo kind of takes the edge, especially whenever you look at what's also cool about the Technisys acquisition is that SoFi is not just a North American or even just an American company. We have Galileo services a lot of Latin American countries. I think they're going to go abroad as well. I know that SoFi has services in Hong Kong, and there might be a little bit of talk about Singapore. However, it's not confirmed. But Galileo, in fact, does do Canada, Mexico, US, and in some places in Latin America as well, which other companies like CoreServe, the other only Visa certified partner, they do not offer that at all. They only offer United States of America. So if you're a fintech looking to branch out, that's an offering you can't beat.
One cool thing, I can't share my screen. So if somebody could show those 3 pictures I shared on Technisys and our SoFi drive. And in any case, the cool thing about Technisys is they kind of started not in America, which is the best thing you can do if you're a fintech company, because it's hard to start a business in America. But the cool thing about Technisys is they're so future proof. After just like reading about them for a while, they have like a 20-year roadmap, and you could see that on the second picture in that folder. And it's not on the docket. You have to go back to our folder. But in any case, so basically, like what they're trying to do is reach AI communication in 20 years from now. So like you're talking to your bank, and instead of having to call somebody like on a phone, like an agent saying like, hey, why didn't my deposit go through? You're just going to talk to your AI phone and say, hey, why didn't my deposit go through? And it's going to be able to understand inflection, context, and all these really unique things. And that's what Technisys is trying to do. Like they're trying to build the foundation. It's really cool when you dive into it. Their website sucks though. It does not look like a super high-techy website or a high-tech company, but what they're trying to do is pretty cool. And they've been able to build a lot of this stuff without the hurdles of the US regulation.
Can we just once and for all fucking figure this out? Is it Technisys or Technisys? Like you yourself changed the information like twice.
Here's what I heard. So I
think it's Technisys.
That's what I think.
It is Technisys.
Tanner was the first guy I interviewed around SoFi when I was getting to know about it, and he said it was Technisys. So
yeah, I got harp on it. Like people,
and I was like, "Hey, what do you think about Technisys?" And they're like, "What the fuck is Technisys?"
Yeah. You're like, Tanner's a smart guy. He must know how to pronounce it.
Was I doing it?
Technisys.
I was dying on that hill for a long time because I kept hearing Anthony Noto say that, and then he switched, and I was like, bro, you left me here. I was with you. Like, so I think it's Technisys.
Okay, Technisys. That's what we're going with. Is that final?
Yeah, we've settled it.
Yeah.
Great.
Here on SoFi Weekly, we just said it. It's now in stone.
So anyway, you're gonna have to get used to it because you're the one who kept fucking it up.
Did anyone see my video that I posted a couple hours ago?
Apology video?
Yeah.
Did you sell your whole portfolio like me?
No.
Is that what you're doing? Like,
I'm telling you, after this, you guys got to go see it. But I had a shirt, a SoFi shirt, and I was looking for it for the podcast, and it's nowhere to be found. So I don't know where I lost it, but I was wearing it in that video. I wanted you guys to see it. But
episode 2 and already selling out.
I'm starting to make SoFi merch out here. Okay, I'm dying on this stock.
This is something that people can. Yeah, go to the second one, the one that looks like a map. This is something that if you're watching, you could pause after the fact and you can actually dig in why Technisys is different. The third one, I'm so sorry. Yeah, so this is their roadmap. No. Yeah, you got it right there. So if you look, what they're trying to do.
Can we go to Riley's family pictures after this? Just casually? Is that what that is?
No, that's not me. No, that's somebody else.
You guys can see it. Okay, hold on. This is really cute. This is my dad.
What is he telling you?
This is my sister. This is hold on. Me is right here on his lap, and then this is my sister. It was a long time ago. But, okay, back to Technisys. Go ahead. Or Technisys, whatever the fuck it is.
Yeah.
So okay, so let take a step back and think of banking as first principles, and just think like when do you need your bank like to be by your side and help you through situations? Like everybody's had that moment where they've gone into a store, they've gone in the checkout line, they have a bunch of groceries, they have two things on their mind, and then they get up there and their card's declined and they're embarrassed in front of everybody. That is a banking problem that can't be fixed today because it is impossible. So in the future, what Technisys is banking on is that it's going to be insightful. It's going to be really helpful. Like whenever you need something, it's there for you and it will give you a product instantly. So think of it this way. Like you walk into Walmart and you have $200 in your bank account, but Technisys knows that you spend around $250 on Saturday for groceries for the family. So it says, hey, usually you spend a little bit more than what you have in your bank. So would you like a buy now, pay later loan of $50? And you could just pay it when your next check comes in, and we'll just deduct it from your next paycheck, and you don't even have to think about it. And you can be like, okay, sure, let's get some milk with my groceries today. And you don't have to like fall into these traps. And there's so many like problems that we're just not even thinking about because it's impossible to solve now. And so that's what Technisys is trying to solve in the future. Oh, this is going to be really rough, guys.
Yeah, I think the AI side of banking is quite interesting, considering how many noticeable purchasing trends that there are. You know, your spending trends, your saving trends. These are things that AI can pick up very quickly, and SoFi is trying to learn that, especially with Technisys. And so, being able to offer some sort of solution. You know, they always want to be the innovator in this platform, which I think is so weird because I think Kathy Wood passed up on this stock, saying that, you know, it's not really an innovator, or they don't think that it's just a regular neobank. And I don't think so. I think the AWS side of SoFi is a big innovator, whether that's not a big enough portion of the company to actually be considered an innovating company. That's probably what's happening here. But I think that adds a bit of security for people, knowing that they do have a great lending side of the business that can actually fund, you know, the R&D of companies like Galileo and Technisys. I said it there.
Joel says, any thoughts to this comment? Joel says, banking is so boring, I can't get excited. Why are we excited about banking, but Joel can't get excited?
Because banking sucks,
I'll tell you, Joel. Sorry, go ahead.
It's a tech company.
Dude, you know
that's all I'm going to say.
Banking sucks. Like I remember getting my dad, when I was 13 years old, drove me to Wells Fargo, and I sat down with a banker and we opened up a checking account, and my password was 12345. That was I was so proud. I felt so good about myself. And then 10 years later, I'm still using the same bank, and I'm in college, and I dip below my amount, and they charge me $35 after a decade of being with them. And it something in my body, it pissed me off.
Wait,
so
why
much
did they charge you $35?
Because I had some sort of recurring fee that like dipped below the amount of money I had in my bank. So they charged me, what is it called? I haven't had one in so long. Overdraft. Yeah. And then like SoFi offers overdraft protection, just like they're solving problems that the banks can't solve now, just because it's impossible to actually switch up their entire model because there's so many people who have been there forever. And I think it's a dumb business that's going to ripe for disruption. By the way, I don't know if y'all know this, but this year alone, out of all of like technology like spaces, fintech has received the most funding.
Yep.
Like out of all of them. Yep. Like there's about to be a lot of competition in this space, and it's going to blow up. And there's
you saw that data from AngelList, right?
Yes, that's exactly where I saw
it. It was like $80 billion or something to fintech startups.
Insane.
I thought the SaaS line was way cooler. The amount of deals that they actually made versus the capital that was deployed. Go back and look at that chart. It's ridiculous. It's, you know, it looks pretty in line with every single other one. And then SaaS is like triple the amount versus the amount of deals. But anyway, that's not here nor there. I was just showing to Joel why you should be excited about this company. And it's for reasons like this. Like Robinhood has a valuation that's much higher than SoFi's, but SoFi is only at 4 million members. And by the way, this is way higher than what they projected just 2 years ago. So they're growing much faster than they thought that they would. And this is expected to continue. So, and by the way, their products are growing even faster than their members. And this is another very, very exciting part about SoFi is that they're cross-selling. Okay. And let me just scroll down really quickly in this financial services productivity loop, which is, what we spoke about last episode. This is what's really, really exciting is that before, just a year ago, we used to be very lending heavy, okay? Very heavy on the bottom of the funnel. Now we're starting to get very, very heavy on the financial services, which actually pays us less, but it is very, very exciting. And this is only going to get bigger and bigger because the idea is that a customer acquisition cost or a CAC is how much we actually pay per different product. So an invest product can be anywhere between $10 to $25 per acquisition, where personal loans can be anywhere from $300 to $850 per acquisition. Okay. So, and this is across the banking sector. Okay. So this is not a SoFi exclusive. In fact, some would argue that it's even higher for traditional banking because of things like, normal costs to get advertisements out on TV and these sorts of things. But with this, what we're trying to do is get everyone onto the money and invest products and then have them in app. Okay, we can go, hey, by the way, we can see that you're trending and spending way more on SoFi credit cards or even money outgoing to other credit cards. You're sending a lot of money to Amex. Are you having debt consolidation problems, stuff like this? Why don't you get a personal loan? We can lower that rate for you and you can consolidate it here. And that's all we're going to offer them. We're not going to offer them the $300. We're not going to offer them the $850. But yet we picked up that customer for maybe $10 to $25. Okay. The lifetime value of that customer, once we actually get them onto SoFi Money, they cross-sell into SoFi Invest once they find out how awesome this stock is. So they want to buy the stock, so then they get Invest. They get personal loans to consolidate their debt. But then that person might be 5 or 10 years into their relationship with SoFi. They get a home loan. Maybe they get a joint account with their wife. The cross-selling ability is unreal, but yet we only paid for that customer once. Okay. Then the lifetime value of that customer, every single time that they tap their card to, make another purchase on, their daily spending, whether that's through SoFi credit card, their debit cards with SoFi Money, or just paying off their loans that they have with us. This is a continuously stacked amount of money that you make over time. This is the same thing that makes SaaS companies exciting. This is the same thing that, makes any sort of royalty or overtime monthly payments. That's what makes these companies exciting, especially if someone's into these new tech companies. SoFi is a very exciting company. It's not traditional banking. It is explosive growth. We're trying to blitzkrieg onto the market.
Okay, quick devil's advocate by Sean. He says you just described like 15 banks.
Yeah, so let me maybe just piggyback onto that. Well, okay, so I get where he's coming from because he's saying like not banks, but fintechs, essentially. And look, Joel's question was banking is boring. And in fact, I think that's where the opportunity is, right? Because, okay, you saw this 80 billion just being injected into fintechs. Why? Well, because people are realizing that banks and insurance companies are the last laggards that are ripe for innovation. Like these are secular growth trends because people are starting to wake up and to say, wait a minute, I'm really tired of paying all of these fees when I don't really need a middleman because the internet has enabled so many different things for me. Like I can do all of my investing on a mobile phone. I can do all my banking online. I don't need a physical branch. Like the last time I personally went into a physical branch, it's been years. And so you had different levels of innovation from the traditional legacy banks. And the reason why their customer acquisition cost is in the hundreds and sometimes in the thousands is because of the fixed costs. All of the major banks have the most expensive real estate in the world for their branches, right? And then you move that onto neobanks. So neobanks are all online, they're all digital. And as a result of all being digital, they can offer you lower fees or maybe no fees at all. Like for mine, I don't actually pay fees because they don't have all of those fixed cost requirements because they're all online. And then the next paradigm is something like what SoFi is doing, where they're saying, why should we have everything separate? Let's have it all live in one space, whether it's your mortgage, your personal loans, your credit cards, and your investment accounts. And so over time, and I just listed like 3 different layers there of optimizations onto a legacy banking infrastructure. And that's why banking is exciting, at least to me, because you need these different layers of innovation, because the industries literally have been benefiting from this entire system for the last 70 years, 80 years, where they have not ever felt the need to innovate because it's just completely oligopolized. Like there's 3 or 4 major banks, and it doesn't matter because they all offer the same thing, and the consumer always gets screwed. And ultimately you have to pay these fees. Why? Because your parents paid the fees, and there's no real alternative. There's no real other way of thinking.
Let me hit another question in the chat. Why can't? What about J.P. Morgan and Chase and Bank of America? I know the argument is they're not interested in it, but if they did get,
they are.
Okay.
Sorry, I interrupted.
You know where I'm going with this, Riley. Why couldn't they just beat SoFi?
So there's some big news. Marcus, Goldman Sachs, which is like a really traditional player that has been really trying to lean into the tech side. Like they're the ones to partner with Apple, right? And then they're also the ones that made the Goldman Sachs app Marcus, which is named after one of their founders. And the idea was, when they started it back in 2016, is to just kind of like build another Goldman Sachs right beside the regular one, but it's a lot newer. So then over time they can slowly transfer everything. But they're losing so much money off of it. Like if you look up Goldman Sachs Marcus fails, like right now you'll see tons of news stories about how they're losing money, how they're restricting access to products that they otherwise had open for everybody, and they're only giving it to wealthy clients. And then also, there's a lot of analysts that speak to people inside of Goldman Sachs that aren't even actually really happy about the whole Marcus thing, because it's just they're losing money, and bankers don't like losing money. Like one thing about the Apple thing, goodness gracious, the Apple Card partnership that they have with Apple. Apple's building the tech. Goldman is not going to own that when that partnership is over. So they're in this thing together, and Apple's going to make all the tech based on Goldman Sachs' old banking infrastructure, and it's not going to be new. Honestly, I think the Apple partnership with Goldman Sachs is the best thing ever for SoFi, because it eliminates Goldman Sachs' ability to build their own infrastructure, because Apple's doing it for them. But Apple owns all this proprietary tech that Goldman Sachs isn't going to have by the end of 2030 when their contract is over. So I feel like the next decade, Goldman Sachs is out of the race. And then also these bankers, like there's a cap to how much you can make as a banker, but there's no limit to how much money you can lose. So like you have one job, don't lose money. I mean, like you can have a bad quarter or so, but don't lose money. And like that's been a culture of risk adverse like nature that all bankers have now, that is super like still movement. Like SoFi is the exact opposite. We're doing blitzscaling, risk all this capital, let's move into the market as fast as possible. Complete opposite side of what traditional banks. I think traditional banks are so dumb.
A lot of it is about current positions too, right? Like current banking structure has sort of been, increase return of equity at all costs. And because the consumers aren't leaving at a fast enough rate, they don't care to change anything, right? And because they're in that current position right now, shareholders are expecting, dividends to go up, these things, right? So if you're spending all this R&D to create a product like SoFi has, it's going to cost a lot. And I don't think any of them are willing to take the jump. This is exactly the same reason why Tesla was able to get the jump for electric cars, is because they started at, base zero. These legacy banks that come down and actually increase their expenses is a very hard scene for shareholders to see. So they wait and they wait and they wait. And then SoFi is able to build up this great position. And then by the time they realize that electric cars or digital banking is the future, it's too late.
Or they buy them.
This is why I'm super excited. There was a couple comments that I saw that I didn't want to interrupt, but I just wanted to say. He says, Joel says, I like Chase. I've never paid fees. Well, you've never gotten any interest either, So if you were with SoFi, you would have gotten 2.5% on your money with no fees anyway. So yeah, if no fees is a winning strategy for you, that's how brainwashed that these banks have it for you. Is that, oh, I didn't get any fees this time. They're using their money or your money to fund their loans at way higher costs. And SoFi knows that. And the reason why they're getting the upper edge is because they're not being greedy. and the shareholders are happy because we never knew a life other than this, So, we are heading to profitability. If we were doing normal banking standards, we would have already been at profitability, right? So we're already starting at ground zero. We understand these things. So it's a much different scene for shareholders to see. If I could just really quickly, just going back to that other comment saying about the 15 banks, I didn't know what he meant on what side. Is he talking about the the old legacy banks, or is he saying there's other digital banks that are doing what SoFi's doing? Because if it's other digital banks that are doing what SoFi's doing, they're not. No one is offering our product field of offerings, right? Like Anthony Noto said, he goes, for 5 years, people have been saying they're going to do what we do. None of them are doing it. Why aren't they doing it? Chime has 15 million users at this point, and they offer a checking account with a debit card that we supply, right? Yeah. So why can't they offer personal loans? There is a lot of stages in place, and for them to take the jump, it seems harder than what it actually is. And SoFi has been able to crack that code.
So we have like 5 minutes left. I just want to, because it folds into what we're talking about with regards to, legacy is very set into their ways. It's very hard for them to steer the ship away, that it's easier for SoFi to start from sort of ground zero and build the most sustainable way. And then Nathan asks, is it bad if a legacy bank ends up buying SoFi? Because so there's two positions, right? So when Tannor was sort of explaining his case, he was saying this is why SoFi is going to disrupt legacy. But in a lot of the cases, legacy, when they feel threatened, they just throw money at the problem and then buy the disruptor.
Buy us. I've got a price low enough that like make me an offer. I'm sure Anthony Noto's saying that. I mean, no one's too smart to accept a 300% gain or something like this. Is it bad for the consumer? Maybe, but I'm a shareholder, so I don't care.
What excites me about SoFi, I know everybody says banking is boring, but the whole reason I like SoFi is because I want to eat the big banks. I want to kill them. I want to come after them.
I think those are the two positions. I think you guys perfectly summed up like the two camps. Number one, it's like it's personal. They're like, fuck the big banks. We want to completely change the system. And then Tanner's like the pragmatist who's like, hey, man, I'll get a 300% return as a shareholder. Do it. And I'll jump to the next thing.
But this has been the way for every single cult stock like this. You look at Palantir and, you have these data crazy people that are like, we're going to take down all these people who are stealing our data and put it into the hands of someone who is not going to go through everything that we have. And then you have the other people where it's like, okay, well, buying it at this price is a good return. And I'm not a mission-driven investor. I'm a returns-driven investor. And at this price, in this crazy market, SoFi continues to make a good return. And we'll definitely see that November 1st.
Sometimes a good mission makes a company that provides good returns.
Yeah, absolutely. I mean, I think at this valuation, it's at under $5. It went above $5 today. Like,
it'll go back down.
It'll go back down. Yeah, it'll go back down.
Yeah, there's
even if you don't care about the mission at this point.
There's no way in hell that Anthony Noto would even consider any offer under like 35. I would say, like, we were trading for what, 28, I think was the peak. And if he turned down $8 billion in 2017, there's no way.
He's said it more than once that SoFi is his life's mission, or the culmination.
Yeah,
of his
he wants
life.
to be
he
a
wants
top
this
10.
to be his life's work.
He wants to be a top 10 financial institution. And I think Galileo and Technisys as the a side or a subsidiary of SoFi, it's a good hedge on where's SoFi going to go? Is this going to be a technology platform type of company like a Stripe or a Visa, or are we going to be more of a banking side? And I love that hedge. And the most exciting part is that all three of our companies are growing at the fastest rates right now. It's quite insane.
Yeah, I like that point you make about it being a hedge, because like for example, TJ, shout out to the Wheel Deal in the chat. I interviewed him. He has 200,000 shares of SoFi, and he didn't really care about the AWS of fintech stuff. He just cared about the personal banking side, because he was like, he has a $25,000 check that the banks were taking forever to cash. He's like, fuck, this is stupid. And then you got someone like me, who I really didn't care that much about digital banking. I cared more about the platform, because obviously I'm a big Palantir shareholder, and I really, I like platform approaches when it comes to companies. So I think there's a lot of different reasons to be interested in this company. The number one reason, I think, is the valuation. at this point.
Yeah.
Now it's kind of ridiculous.
I agree.
And I agree with that.
Let's prep episode 3 in this last minute here. We didn't even touch on a $200 trillion available market right now, a total addressable market in Galileo going after, B2B, the actual, companies, paying other companies. This is not a space that Stripe has touched. This is not a space that any of our competitors have touched. And because we now have a bank charter, we can actually start going after that. And hopefully there's some new news as well. I don't even think we touched on
100% new news.
So, come back next week because there's so much to cover. This T. Rowe Price partnership is huge. It's a really big company. So yeah, very, very excited.
All right. Thank you all for joining. We hope you enjoyed. 165 people that were here on a Friday night really means the world to us. And,
shoot, I forgot to join y'all this time. Damn it.
Yeah.
Are those real glasses? Are those real? They're fake.
No.
$200 trillion. What? Come back next Friday to find out. Or go to my YouTube channel down in the description down below.
I got everyone's Twitter and YouTube in the description. See you next week, guys.
Bye, guys.